Everybody, welcome back to the channel and another video. So today I thought I'd do a quick look at Lux Trading. Now they're a prop firm that works more on a career path. It's very slightly different to a lot of the other prop firms which have the standard phase 1, phase 2 challenges and getting funded. Here you're really rewarded for consistency and risk management and not going wild and placing huge trades to try and pass as quickly as possible. So I thought it'd be worth sort of taking a look at some of the rules, some of the features. It might actually be worthwhile for some people watching the video. As always, I've managed to get a referral link that's down in the description below. It also comes with a 5% discount if you are wanting to sign up. But as I said before, make sure you do your own research, your own due diligence, and make sure you read through all of the criteria on their website before making a decision, as well as trying out their free evaluation. So what do we mean by career path trading? Now, with most prop firms you get funded and it's down to you to manage it as you want to, and a lot of these scaling plans aren't really that conducive to actually getting big accounts with them, although they say they offer very, very large accounts. You look for some of the firms as an example, you have to get a 10% growth over a 3-month period and your account size grows by 30%. The only way of getting bigger accounts is by buying more challenges with them. Now with Lux Trading, effectively what you can do is double the account multiple times by getting a 10% increase over a period of time, and that allows you to go from even some of the smaller accounts. So you say you sign up with a $25,000 account, that can still get you up to a funded account size of 10 million, which is absolutely massive. Now all these, they start on the typical process of proving you can trade on a demo account. Now in the first phase you need to get a target of 6% and you're only adding a maximum drawdown of 5%. That's where it really differs. A lot of other places will have a daily drawdown max limit of 5%. Here is a total drawdown of 5%. So again, if you are small risk and actually looking for consistent growth, that will allow you to get there. The other rule on the phase 1 is you need to actually complete it in 29 trading days. Now again, this will be conflicting with a lot of other traders out there who want to do this as quickly as possible. But again, this is geared for the consistent growth traders. Now 29 trading days is actually placing a trade and effectively having it closed out on the same day. If you're a swing trader and the trades run for a longer period of time, then that actually reduces it down to 15 trading days effectively. You need to actually open and close a trade on those days. Now the problem you have with that is, now as always there's a problem with that. If as an example you've managed to hit the profit target of 6% in the first number of days, you then can't switch that strategy to trading small micro lots, which a lot of people do on other firms. You still need to trade consistent with your own strategy, otherwise that's deemed as a failure. So I can see in some cases, if people are risking sort of 1% per trade, they get onto a good winning streak in the first week, 2 weeks, they're already there. They've got to carry on trading that for another potentially 10, 15, 20 days to actually get into that first fade evaluation, and that's where sometimes a drawdown can actually happen. Yes, you've got the ability to open and close a trade quite quickly and not be in breach of some of the rules, but again, I would make sure you read all the FAQs and their trading styles on the website before you go ahead with this. Phase 2, before you can get your funded account, you need to hit a 4% target. So when you're looking at this overall, it's only a 10% gain to be able to get into the funded status. And I think in the second phase, there aren't any of these time restrictions. You can do it at your own leisure. So I think when you look at it overall, yes, you might have to do 29 trading days on the first phase, but if you can do a small number on the second phase, you're still well within the timescales to getting funded compared to other prop firms. So again, not so much of a bad thing for me. The other good thing is if you get through the first phase, you get half of your actual fee refunded, and if you then get funded at the next phase, you'll get the other half refunded as well. So that again is a more incentive to stick to the rules, pass, and get your money back as quickly as possible. When you're into a funded account, then the things do change very slightly in that the maximum drawdown reduces from 5% down to 4%, and the profit split is 75-25. As previously mentioned, they're really looking for consistent traders who only have one particular strategy. So you can't really switch between, let's say, scalping into swing trading, into position trading. You need to be consistent on your one particular trading style, as well as sticking to particular instruments, whether it's Forex or commodities or indices. Now what I am seeing talking to a lot of traders, generally a lot of people do stick to that. They like to focus on one particular instrument. For me, gold is very good at the moment. I know a lot of people stick to the US indices, so Dow Jones or the S&P 500. And that actually really works for getting into that pattern, that flow, and if you're able to understand the actual market, that instrument, you're not really scanning for 100 different Forex pairs that might actually be applicable to trade. It's about consistency and sticking with what you know. As always, they've got a range of trading platforms, so MetaTrader is the de facto standard for prop firms. There's also another one they've got which is more bespoke to them, sort of more customized for their particular broker platform, and it seems to be based a lot on the back end of TradingView and has a lot of additional tools as well, which might actually be a benefit to some traders. I found it quite confusing to start with, but I've persevered and actually got quite good with it. I've done a few mistakes. Now, one of the mistakes actually turned out to me understanding one more of their rules, which is when you actually place a trade, you must have a stop loss in place, otherwise that's deemed as a violation and not a valid trade. You also can't place a random stop loss. So a lot of times I get into trades where I just put a stop loss at 1,000 points away as an example, and I can fine tune that and bring it back down. Here you have to actually have a stop loss which is not breaching your maximum amount of risk on any particular day as well. So you need to be more calculated, understanding placing trades, position sizes and risk management. And again, I think that's a great thing to make more traders aware of what they should be doing, and rather than just getting in and scalping for very quick moves, as soon as the trade gets a profit, close it out and ignore the risk. I've seen so many occasions where traders do that sort of trading style, and before you know it, they've blown the account and breached all the rules. So what I'm finding really appealing with Lux Trading at the moment, and that's why I'm considering it, is although I'm actually only trading 1 or 2 pairs at the moment on Forex and a couple of indices and commodities, I could very easily focus that into one. I could just focus it down to trading gold with very low risk and actually then work to build a strategy. You are allowed to use EAs as well with Lux Trading, so if you're using MetaTrader, it's easy to program, customize and actually use an EA, providing it's your own proprietary EA and you've done it yourself. So that's why I say there's real big potential there to start to customize an EA, work with one particular instrument, let it have a good risk management, always have a stop loss in place, and just let it run. And if you're able to do that, as well as monitor it as well, so if it does start to go a bit haywire, you can override some of those trades and get out of them. You can start to see some real good gains over a month period, especially with a lot of the automation of back testing. So again, that for me is a big positive. Now, they don't allow copy trading on these particular accounts. So that's, again, a lot of people won't like that. They'd like to have a particular MetaTrader account they might be running another prop firm and just push all the trades into another one. Here it's not allowed, they need to be your own trades. Looking at trading news, that's fine. Holding over weekends, that's fine. So really it's sort of, here it's focusing on having a clear strategy on one instrument or one type of instrument like Forex or indices, and just sticking with that and showing a slow, continual growth over a month or 29 actual trading days to get into that phase 2, get your funding, and then every time you get to hit 10%, then scale the account all the way up to 10 million. So here I can see there's definite benefits there for a lot of traders. Me personally, that's where I'm starting to go, and I think I will definitely be signing up these in the next couple of months. So is this a prop firm that appeals to you? Are you a trader who likes consistency, low risk, building up momentum over a period of time, and be able to scale the account really quickly? Let me know in the comments below, and I'll do my best to respond to all of them. So as always, thanks for watching, and I'll catch you again soon. Cheers!